Hi, my name is Darson Grantham. I'm a realtor and investor here in Des Moines, Iowa. In today's video, I'm going to go over a couple properties and we're going to analyze them for rentals. And what I'm trying to do here is just give you an idea of what's on market and how I would calculate these type of rentals. So these are things that are on the MLS, actively for sale. First one I'm going to go to is 3001 30th Street. It was just listed 3 days ago, so Thursday or Friday. And the site that I'm showing you right now is the back end of the MLS. So the back end where realtors use to kind of get all the information that they need. And sometimes there's good information, sometimes there's bad. So as you can see, gross income is not listed, expenses not listed. It does say the tenant pays the electric, the gas, and the water. And in this property, it's actually two properties on one parcel. And I say that because looking at the description, great rental history, cash flow for this duplex in Northwest Des Moines. 3001 30th has 2-bedroom, rents for $1,000, and then at 2911 Adams is 1-bedroom and rents for $700. So that makes me think that this is two addresses on one parcel. Now, just to see if it's one parcel or not, I'm going to go click and go into the Polk County Tax Assessor website and see. Yep, that pretty much answers my question. It is two properties, which is super strange, not very common, where you have, they call this a duplex, but really it's two single family homes on one parcel. So the interesting thing about this is if you wanted to own or finance, or if you wanted to live in one of these units and rent out the others, it's gonna be really difficult to finance from my experience, is because a conventional loan is going to look at this as a very non-standard product, and it's not really a duplex, but it's not really just a single family. So I've seen this happen once or twice, and it's really tough to get a conventional loan on this. Typically, for this type of property, you have to have a commercial loan. I could be wrong. Definitely reach out to your loan officer, but that's my experience. So I'm gonna go back. So we know the numbers. They say $1,000 for the 2-bed, which I think is maybe a little high. It could be right on, but it's on the higher end. And then a 1-bed for $700. Again, that's kind of on the higher end price-wise. But I'm gonna take their word for it. It does look like they're pretty well rehabbed, actually. I mean, I don't see any big issues with that. Looks like new flooring, big yard. Okay, we'll just go with it. So what I'll do is when I calculate, I always use the Bigger Pockets app. So I will log in there and pull it up. So we're just gonna call it 30001, and what was the address? 30th Street. We're gonna show it on a map now, actually, just to get everyone have a perspective on where it's at. So Beaverdale's here, subject property is up here, Hickman Road, downtown is going to be down here, Drake is right here. So just northwest of Beaverdale, not a bad area, no issues, no concerns, no issues with the area that I would have with. It does look like it's right on 30th Street. So 30th Street is a little busy, but you have off-street parking, it looks like, on Adams if you wanted to. So if there is any parking issues, you do have some off-street parking, because you cannot park on 30th. But that is that, and now I'll go over to Bigger Pockets. Bigger Pockets, 31st. Okay, and so I'm just calculating as a purchase price of the asking price is $179,900. Closing costs. I'm gonna do 1%, a little over 1%. So I'm gonna do $2,000 as closing costs. Will not be rehabbing this property. We're gonna do a loan amount of 80%, and interest rate of 4%. No points. Terms. Do 30-year term. Gross monthly income, they say $1,700. I think that's okay. Property taxes, missed that. They already have that pulled. Here we go. So I'm on the Polk County Tax Assessor site. Property taxes $2,830. Insurance on this, I'm going to say $1,500 since it is two different buildings annually. Repairs and maintenance, just because I haven't walked them, my general rule of thumb is 5%. Vacancy is 8%. And the reason I use 8% vacancy, it means out of each year, you have 1 month that you did not collect rent for each unit. So duplex, if you, each unit is empty for 1 month. That's what 8% kind of represents. Capital expenditures, I'm gonna do 5%. Management fees, I'm gonna do 10%. Electricity, owner doesn't look like owner pays anything, so we're gonna put that there. Gas is 0, water sewer is 0, no HOA, no garbage, and we're gonna do others. So this property, you know, I pleasantly surprised with what we're looking at. So monthly expense breakdown. Typically I'll go to this first page. Income, expenses, cash and cash is 6%, which isn't fantastic. It is bringing in $189 a month. And here we go. It shows what all your numbers are. So your mortgage is $687, taxes $235, insurance $125, variable expenses, that is going to be $474, and total fixed expenses, why is fixed expenses negative? Let me go back into that, see what I messed up. Oh, I don't know why negatives showed up there. Clearly put 0. There we go. I do have a little concern on this one on the water. It said water was paid for by tenants. That's what the listing said. So water being paid for by the tenants would mean that each building has a different water line. And what I've seen in the past is when 2 buildings are on one parcel, there's really only one water line. So I'd be curious if that's actually correct. If it's not correct, that's going to drastically change this, where the owner pays utilities. But for what they told us, like, this isn't, I mean, it's not a terrible property. It's not really good numbers wise. But here you go. That tells it all. So this just gives you an idea of a property that has been listed in Des Moines. It's been listed for 3 days. I've not walked it, but does give you kind of my interpretation, my expectations of what the numbers look like. And if anything of this looks like it is appealing to you, reach out to me, shoot me a text, shoot me an email, and I will reach out. I'll get you a video walkthrough, and we can see if maybe it's worth putting an offer in on. If not, just gives you an idea of what you can expect to see on market in Des Moines, Iowa. So with that, I'll wrap it up. Appreciate it. If you like this content, like this information, subscribe below, and I'll just keep pumping it out and showing you what Des Moines market looks like in the small multifamily arena. Again, Darson Grantham with Keller Williams. I appreciate your time. Thank you very much. So on this in this analysis, we're going to look at 1235 62nd Street, and there are no pictures listed on the MLS. So there could be multiple reasons why this is the case. It could be because all of the pictures are terrible. It could be because the listing agent was not able to get inside and the owner wanted to list the property without pictures. It is perfectly normal in the small multifamily market that this happens, and it of why. But we'll just assume best case. And in this one, I'm going to look at the map just to give you an idea. Where's it out on a map? It is in the in between Windsor Heights and Waveland Park area. Pretty solid location, good little neighborhood. This is a fun little street, Merle Hay area. Yeah, good area. And what we know about it is we're gonna see if we can't get any exterior pictures. I'm gonna go to the assessor site. Here we go. So we got one external picture in 2013. 2 stacks. This means probably 2 furnaces, which is great. It's side by side, a ranch. Hard to tell if there's a basement. Can't tell if there's a garage in this picture. See what the listing says. Well, we can see 2-story. Does say that there's a garage, 18 by 20 probably. So that's a 2-car garage. Last sold in 14 for $130. So gives us a little bit of background. Better than what we had on the listing. Doesn't say anything about gross income. Doesn't say anything about expenses. Does say tenant pays electric, tenant pays gas, and water is paid for by the landlord. So that is very important. That is a calculation you need to utilize or remember. Nothing that stands out there. We're gonna look at the seller disclosure. This will just tell us the capital expenditures. Let's see here. See if I can get it opened. Doesn't say anything about any new. About 7 years ago, there was a pest infestation. Doesn't really tell what it is. So not much on the seller disclosure. So we don't really know if we should calculate high or low capital expenditures. So I'll just kind of use the standard stuff. So next up, I'm going to go to get the address, pull that, and we're going to go to Bigger Pockets. We're going to analyze the calculator. We're going to analyze the rental analyzer. Street address. There we go. It's Des Moines. It's importing property data. I did not know it did that. I don't know what that means. We'll see what it pulled in. Purchase price. It was also $179,900. We're going to say $2,000 in closing costs. Not be rehabbing this property. Loan. We're going to do an 80% loan. Interest rate. We're going to run it at 4%. No points. We're going to do 30-year term. Rental income. So side by side, I would say I think you can get for 1 bedrooms in this area. I think you get $800 each side. So we're going to do $1,600 per month. Property taxes. We pulled that up. It is $4,468. Insurance, we're going to do $1,200. It's a pretty standard, for a duplex ranch. Looks newer, not newer, but looks well put together. Repairs and maintenance, 5%. Vacancy, 8%. CapEx, 5%. Management fees, 10%. No electric paid by landlord. No gas paid by landlord. Water. So we do know that this is going to be paid for by landlord. So what I always try to do is probably $75 to $85 per bedroom. So we're going to do $160. We'll do kind of in between. No HOA fees, no garbage. So in Iowa, in Des Moines, I should say, your garbage and your water is combined. So when you put in water, that includes your garbage picked up by the city. So here we have negative $165 per month cash flow. That's almost the exact amount of the water bill. So think about that. If you didn't have that calculation in there, you'd be really confused about why your numbers look poorly if you expected the tenants to pay the water. Now you can always bill them back, but the water line is not split, so you likely are going to have to do an after bill calculation for that. So it's possible, just not the common practice. So here we go. Your mortgage, taxes, and again on this one, taxes are $327 a month. So that's higher than what we've seen in the past. Other fixed expenses. Why is fixed expenses $160? Oh yeah, duh, because it's water. It's interesting they call that fixed, but they don't call these. I guess those are estimates. That's fair. So here we go. You got your numbers, given what they are. That's tough. Now, one thing I'll do is maybe we're low on rents, right? So what can you expect if you have rents higher? I don't think you're going to get much more than $900 a month for a 1 bedroom. So, and I do think that's even high. I don't think that's right. But if we calculate that, say you're getting $900 each side, so you're getting $1,800 total. We'll recalculate that. Still a negative cash flow. So this property, it's going to be tough to cash flow anything on this property unless you're putting more than 20% down, or you have a better interest rate than what I'm putting in. So even if you did a 3.5% interest rate, 3.4, we'll do 3.5, and then you get just a little bit of cash flow. Now remember, you're putting in a pretty conservative number on the your variable expenses. So your capital expenditures, your repairs and maintenance, your property management, this is done for you, all taken care of. And likely it's possible you might have a little bit more cash flow than this in some months, but you're gonna have other expenses that kind of wipe it out in those months. So this gives you an idea. It says 5-year annualized returns 14%, which is great if you know you're gonna hold for 5 years. And it just gets better and better after that. Let's see here. So I don't know if I can. Yeah, so in year 15, you're cash flowing $250 a month. In year 10, you're cash flowing $164 a month. So things that might be impressive is if you have a W-2 job and you don't need cash flow right now, you just need cash flow in 10 years. So if you bought enough properties and you had $164 per month cash flow and you bought 10 of these properties, you'd be bringing in $2,000 a month and you wanted to be able to retire on that, or that be a portion of what you are using to retire, like that would be a reason to look at that 10-year. I typically don't look that far out. It's really hard to judge what we're going to do in 10 years, but that is a strategy that I've seen investors use. So with that, I'll wrap up 1235 62nd Street. This is my this is my analysis of this property. Apologize for that. Again, I'm doing these just to give you an idea of what is on the market in Des Moines, Iowa, and what you can expect when you're looking here for properties. So these are newly listed properties and their price points and cash flow. Obviously, these are all assumptions. Many of these calculations are assumptions. So if you are putting down more money, or if you're putting down less money, all of these are going to fluctuate and change. But again, I'm trying to just give a general rule of thumb of what properties are looking like in Des Moines, Iowa. So again, my name is Darson Grantham. If you like this information, subscribe below, pay attention to the channel. I will continue to try to bring you relevant properties that might be entertaining to you and or might be able to put some offers in on. So again, my name is Darson Grantham with Keller Williams. I'm a realtor and investor in Des Moines, Iowa. Thank you for watching.